Welcome back to another episode of Real Talk. My name is Joe Deardurff.
And I'm Christian Castro, and we are brokers here in the Chicagoland area.
And we are on the Crotty Group. In today's episode, since we are now in quarter four of the year already, Christian and I want to cover some market stats to compare activity in the real estate market from this year to last year, and then what we anticipate coming in the year ahead. So this can be seen as our 2024 Chicagoland real estate predictions.
Definitely, especially recently with the interest rates coming down. I think it's a good time to kind of look at some of the stats and see what we can predict in the next coming year and how you can prepare yourself for your real estate needs. Yeah.
I think we can agree, and as many of you probably have heard through various headlines in the news, that the real estate market in Chicago right now is in a deep freeze, as they're saying. And let me explain kind of what that means. And Christian, you can back this up with all your information on interest rates, but sellers are not wanting to sell because they're locked into low interest rates from the pandemic era, sub 4 or sub 3%. Today's rates, we're still hovering in the mid 7s. And so that's causing listings to dramatically decrease versus where we were at last year and the year before. With fewer listings and higher rates, you have fewer buyers. And that's why we're in this tough position where buyers are having a hard time buying, there's not enough homes to buy, and rates are high. Real quick, just to put it into perspective on where we're at with new listings. So we are down 27.9% from last year to date. So almost 30% fewer homes for sale. From 2022 to 2021, we were down 20%.
Oh, wow.
So between the last 2 years, we're looking at a combined 50% decrease in listings versus this time just 2 years ago in 2021.
Yeah, and it's crazy to think that just because, there was a period where for 10 years we didn't really meet our housing demands, right? There was a 10-year period where our supply, right? We weren't meeting those demands, and it's crazy how right now it's affecting us, especially with the amount of demand we have. And just to think the fact that we're 50%, from 2021 to 2023 now, the fact that we're roughly around 50% decrease, right, since then. So it's crazy to think, and there's still a lot of housing demand, which it's crazy to think that next year when interest rates do happen to potentially decrease, the demand is going to go crazy, the prices will skyrocket, and it's going to be a crazy mess. But I'm here for it.
To your point on pricing, there were some predictions around this time last year that there's going to be a cliff that we're going to go off on the home prices. Well, just not the opposite has happened. We've actually maintained stability. So typically when you see a falling inventory market like we're in, as I mentioned, the 50% decrease over the last 2 years, you would normally see a spike in opposite direction in home prices because you have high demand and low inventory. However, with rates being where they're at now, they've doubled since where we were in 2021. People thought we're going to see home prices fall to make housing affordability easier, especially for the first-time buyer market. However, because inventory is low, it's actually kept prices stable. So year to date, we are flat from where we were on the median sales price between 2022 and 2023. And this data is from the Chicago Association of Realtors and pertains to the entire Chicago area, so all Chicago zip codes. However, the same is largely true for the collar counties of Chicago and the suburbs, and largely nationally. But we're focusing on Chicago here with the median for attached single family homes, so condos, median sale price $355,000 this year. Same median price this time last year.
What baffles me really is honestly the fact that a lot of these consumers, right, or home buyers or wannabe home buyers, right, they listen to all this mass media that's being thrown out there, and like you said, with the housing supply being such, so short and demand still being high, right? Not a lot of people understand the basics of economics, right? People just see whatever's on the media, people thinking that prices are gonna fall and we're gonna go into some serious crash here. But if we just go back to the basic economics, right? Supply and demand. If there's low supply and high demand, prices are gonna skyrocket, and vice versa. If there's low demand and high supply, right, prices will fall, right? But we're not seeing that here at all. Like you said, 50% down from 2 years ago, right? So, and what is it? Almost 30% down since last year.
Just since last year, yep.
Yeah. So, I mean, just that in mind, right? And also the shortage of supply that we haven't built, the housing supply, the fact that we didn't build for 10 years or at least meet those expectations of demand, right?
Chronic underbuilding is what you're talking about.
Exactly.
Since the housing crash of 07, there's been chronic underbuilding, which has resulted in a new generation of buyers not having enough homes to buy. So on that note, with your data on interest rates, where do we predict 2024 taking us in terms of interest rates, inventory, and home prices?
It's funny you say that because just recently, right, the labor reports came out, and that's actually what shut down the rates recently, right? And I'm looking at here, from 7.86 just a week ago to 7.61, and today is November 8th, just to kind of timestamp, right? But a decent drop, right? And it's already, you can already see the difference in terms of demand, right? There's already been a 2.5 increase in mortgage applications. And just with that small little difference in the mortgage interest rates, just imagine what it's gonna be like when mortgage interest rates start to fall even further.
That was what, about 0.5%, and already buyer appetite is kind of salivating. Just watching these rates. I think if we start getting into the low 7s, maybe sub 6% interest rate, and you'd probably agree, that's when we're really going to start seeing, especially the new buyer interest really take off. What's going to happen to prices when and if that occurs? When do we expect that to happen based on your knowledge?
I think, obviously we're not economists here, so there's definitely
no crystal ball,
right? But I mean, I think we can definitely start seeing it towards half of next year or closer to the end of next year, just because there's still a lot of variables that affect mortgage interest rates, and especially too with election year, right? There's a lot of I guess uncertainty that a lot of people feel. I don't know if that's the right way to say it, but there's a lot of uncertainty that a lot of individuals don't like, and when it comes to election year, a lot of people don't like to do big decisions like that. But I think that shouldn't deter anyone from purchasing a home, or if it's a dream home with their new family, whatever. I think we just got to look at the numbers and the basic supply and demand, right? There's still going to be low supply. The prices will only go up as soon as interest rates go down.
Correct.
And so if you're waiting on the sidelines for the interest rates to go down, you're doing yourself a disservice in a way from getting into that dream house, because right now you can get that house at whatever 761. It's still relatively high, but when you look at it from like a 40-year perspective, that's actually around the average, right? We're only comparing it to the 2 years ago where we were seeing low 3s, high mid 3s and stuff. And so we were comparing it to then. But if you actually take a step back from a 40-year perspective, that's roughly the average. And a lot of people don't understand that. And I think people are going to start realizing that this is the new norm.
This is the new normal. The sub 4 rates that we saw a few years ago, those are all professionals in our industry can agree they're gone for good. And
unless we have like another pandemic.
The way things have gone, nobody really knows. Exactly. But our prediction is that by the middle of next year, we should be seeing sub 6% or sub 7% at least interest rates. Definitely. By that time, the new normal will have set in. Current rents where they're at, current renters are going to start comparing what they're paying on a rental versus what they can pay on a mortgage. And they're going to get back into the buying market. Sellers are going to have that same realization and begin selling their homes. Current homeowners are sitting on huge amounts of equity, and so they have the biggest opportunity to cash out of that equity and use it to buy a lower interest rate or get into another home. The benefit to buying now is you have less competition and you have an opportunity to get a price on a house without a bidding war ensuing, which we anticipate can happen as soon as rates fall by another 0.5 to 1%.
I do think so. For the next couple weeks, we won't see much, inventory coming out just due to the holidays and everything. But I do think once the spring hits, right, there's going to be a lot more demand. I think inventory will or at least not meet that demand right away. I think there will be a point where there's a lot of demand. People who are selling, they're going to be, getting above asking, right? And so more sellers are going to start realizing that with this new interest rate being the new normal, they're going to want in on this over asking, overbidding type of war situation. And I do anticipate more listings coming out next year, maybe closer towards the end, later half of the year. And so I do anticipate more listings, which means more opportunity for new home buyers, but then I will see more of a balance in terms of the price at that point. Whether that's towards the end of the next year or maybe even until 2025, that's what I'm thinking at least. But I will say the demand will be there initially, and the supply, at least the sellers, are going to be more motivated to sell once they start seeing that everyone's getting over asking and making a good move, right? So that's at least what I'm thinking.
I mean, in closing, just to finish up with some stats, talking about asking prices, over the last 3 years that we've been discussing, the percent of the original list price sellers have received has only increased. On average in 21, they received just over 97.5% of their ask price. In 2022, it went up to just over 98% of their ask price. And currently in 23, we're at the mid 98, like 0.5%. Yep. So we anticipate that only going up, as you mentioned, as we've discussed at length, that buyer demand is going up. So if you are a seller considering putting your house on the market, or if you're a buyer considering getting into the market, now's the perfect time to put together a game plan for 2024 to find out how we can make the timeline work for you based on your situation and our predictions.
And feel free to take a look at your new series that came out. If you're a renter looking to get into home ownership, take a look at it and start preparing now.
It's called Opening New Doors. It can also be found here on YouTube. So be sure to like, subscribe, follow, and please do share us with anyone who can benefit from this information.
Thank you.
Thanks, Christian. Thank you all, and we'll see you in 2024. Let's TikTok.
Okay, you are very low in your chair.
Oh.
You look really short.
I cannot have that.
Looking at the light.
So, Christian, tell us about that. No wonder I had to take the mic and pull it down. It's like when you'd go to church and someone go to the pulpit to read and they'd be like, and drag the whole thing down, and you just see their eyes. And a reading from, you're like, oh my God.
Is this rolling already?
Oh, I'm making fun of the church on camera?